Hello guys, welcome. This is Deepika from wealthandhealthmastery.com, and in today's video we are going to see which stocks are going to get benefit if Trump becomes the president. So let's get started. Even though it's only July, investors are already betting that Donald Trump will return to the White House. Stocks in energy, industrials, financials and crypto have gone up. Meanwhile, solar and other clean energy stocks have been struggling. But things are not straightforward with Trump, who caused big market swings with his comments during his previous term. We are seeing similar effects now. There is a chaos in the tech sector because Trump recently suggested that Taiwan should pay for US protection. It's too early to adjust your portfolio based on a potential second term for Trump. Even though he's leading in most polls, Democrats could make a comeback with Kamala Harris as their candidate. Even if Trump wins, it is not clear what changes in policy and their effects are going to be. A lot will depend on Congress. According to research, the major policy changes over the past 15 years have happened when one party controlled both Congress and the White House. If Republicans don't win everything, Democrats could block tax cuts, tariffs, and other parts of Trump's agenda. How should you invest depends on whether you are betting on the election outcome or looking for long-term growth. If you're betting on the election, there are many stocks that might benefit if Trump wins. For example, financials and traditional energy sectors could do very well under the Trump administration. Cryptocurrencies might also see a boost in their profits. Here's what to consider in a few key areas ahead of the election. The catchphrase "drill baby drill" is part of 2024 Republican Party platform, but it feels outdated. Even though Trump supported fossil fuels and was against the renewable sources of energy, he also pulled US government out of the Paris Agreement. The energy sector actually fell 30% during his term due to COVID and low oil prices. In contrast, under Biden, the sector has grown 148% despite his focus on the Green New Deal and rejoining the Paris Agreement. More domestic oil production isn't what the industry really needs right now, as there is already a global surplus of oil and gas. While Republicans plan to increase US production by 3 million barrels a day, companies might not be keen to do this as it could lower prices. Natural gas prices, which come from oil production, would also drop with more supply in an oversaturated market. Additionally, if the war in Ukraine ends quickly, more Russian gas could enter the market, putting more pressure on prices. Reasons to invest in energy include that big companies like ExxonMobil and Chevron are managing their finances very well. The industry has become more efficient through big mergers, and a Trump presidency might slow down the shift to renewable energy and electric vehicles. This would keep the demand for oil and gas strong for a longer time. Trump would benefit companies like ExxonMobil and Halliburton. Other companies that might benefit from this include Sempra and pipeline companies like Kinder Morgan, Targa Resources, and William Cause. The situation could be quite different for clean energy, which covers areas like wind, solar, battery technology, and electric vehicles. Solar stocks have dropped recently, and Vistra, a utility that depends heavily on wind power, is down more than 10% in July. Trump has indicated he would eliminate subsidies for clean energy and electric vehicles, but that might be harder than it seems. Many of those subsidies from the Inflation Reduction Act have supported new plants and manufacturing in Republican districts. This makes it difficult to repeal them in Congress, even if Republicans take control of the Senate and keep the House. Trump could also use executive orders and rule changes at the Treasury and IRS to make it harder for consumers to get EV credits. Tesla CEO Elon Musk, who supports Trump, has said he would not mind if subsidies were removed, believing it would only benefit Tesla. However, other electric vehicle makers might struggle. For example, Rivian Automotive's stock fell this year as Trump's poll number rose. Now let's see the effects of election on banks and cryptocurrency. Deregulation could benefit the financial sector. The financial sector could benefit if economic growth improves under a Trump presidency and interest rates go down, which would boost lending. This might also happen under a second Biden term, with the Federal Reserve expected to cut rates in September. However, Republican tax and trade policies could increase inflation, making it harder for the Fed to lower rates as planned through 2025. Wall Street is hoping that mergers and acquisitions will increase, which would bring in more fees for investment banks like JPMorgan Chase, Goldman Sachs, Morgan Stanley, and Citigroup. Rich Nuzum, a top investment strategist at Mercer, believes there is a better chance of more deals happening if Trump is in the office. The downside is that Trump's vice president pick, J.D. Vance, has shown support for Biden's Federal Trade Commission chair, Lina Khan, who has been tough on mergers, especially in tech. Some analysts believe that big deals might face challenges no matter who wins the White House. Trump has shifted from calling Bitcoin a scam to including cryptocurrency protection in the Republican Party 2024 platform. He has also received campaign donations in crypto, mainly Bitcoin and Ether. Many believe that if Republicans control regulatory agencies like SEC, they would be more accepting of crypto products and services. Bitcoin and Coinbase Global could benefit, as well as fund companies like BlackRock that support Bitcoin ETFs, with more crypto ETFs expected in the future. Some advisors suggest having a small amount of crypto, up to 5 to 10% in a diversified portfolio, and that is going to be my recommendation as well. Republicans' efforts to defend the right to mine Bitcoin could benefit miners like Marathon Digital Holdings and Riot Platforms. However, their stock prices will still largely depend on Bitcoin's price and global demand trends. Big tech will face trade and regulatory challenges in Washington no matter who wins. A worsening trade war with China could hurt the industry, and Trump's comments about Taiwan have made the situation even more unstable. Plus, reports that Biden might add more restrictions on chip exports to China are also not helping. One wildcard is J.D. Vance. While he has ties to the tech industry, he has also been critical of the growing power backing Lina Khan's actions against companies such as Alphabet, Amazon.com, and Meta platforms. The main reason to be optimistic about tech is artificial intelligence, which is currently helping semiconductor companies the most. As AI becomes more integrated into devices and software, leading tech stocks like Apple, Microsoft, and Alphabet, currently trading at lower prices compared to Nvidia, could see significant gains. Investors should not completely change their portfolios based on elections. If Democrat wins, things will likely stay similar to what it is right now, but that's good. That's not necessarily a bad thing. The market is near all-time high thanks to a strong economy, innovations like AI and GLP-1 weight loss drugs, and lower inflation. Remember that a portfolio with 60% stocks and 40% bonds has performed almost the same under both Republican and Democratic presidents since 1860s. The average annual return has been 8.1% with Republican presidents and 7.7% with Democrats. Better gains have come when one party controls everything. Since 1928, when either Democrats or Republicans have had the full control, the average annual return for the S&P 500 has been around 9%. This is higher than the 6% return seen during times of divided government. If you are very concerned, consider gold. It's been reaching record highs and seems to be benefiting from fears about geopolitical instability and inflation, which are associated with Trump elections trade. Gold stands out as a winner. I believe that key factors supporting gold, such as concerns about debt, trade issues, and America First policies, are likely to continue. Gold can be considered a good investment at this time, and I truly believe in that. So if you're a little worried about the market right now, gold should be your best bet. I hope you enjoyed this video and you like all my stocks that I picked under the Trump's administration. If you want to watch such kind of videos in the future, don't forget to hit the like and the subscribe button so you don't miss any video from the channel. Stay tuned and I'll see you tomorrow with another stock video. Thank you and have a wonderful rest of the day.